Anurag Singh, good morning. We are discussing GDP data thread and bear, and for the first time, there is a bit of a wrinkle there.
Yeah. Nikunj, morning. So Nikunj, let me give you my construct on this, right? And I understand I've been watching this GDP number fluctuate a bit. Here is my construct. I don't look at the real GDP number declared. I look at the nominal GDP. And see, because there is a deflator that the statistical department uses, and it's very complicated. It's a mixture of CPI, WPI, and it never really works out unless only the economists really understand it. But the nominal GDP growth in India, and look at the 10-year trend since 2014, it broadly falls at around 10%. I mean, including the average out the COVID fluctuations as well. It is at 10%. I understand this time it has come around 8%, maybe because of the government spending, but I'm reasonably confident that 10% nominal is the India growth story, and that's what it is working with. Right now, and the second construct I work with is that if GDP nominal, and because markets work on nominal basis, if GDP nominal is 10%, market should give us 12%. That's nifty large cap companies. I think so. If investors broadly keep in mind these two larger constructs, I think we are at a fine place. And let me just add one more point, Nikunj. If you look at Jan 2020, Nifty was somewhere around 12,000. And if it grows at 12%, it doubles every 6 years, which means that by end of 2025, if we are still at 25,000, 24,000 Nifty, that's a double. So I think we are in line with the long-term average, except that we'll take about some time correction for 6 months to 1 year to absorb this 24, 25,000 levels on Nifty. So that's a broad take. I don't really worry so much about the short-term fluctuation. I think the 10% story of nominal GDP is intact.
Sure. Hi, Anurag. This is Anisha also joining in the conversation. I like how we try and look at the glass half full and start looking at the, nominal versus real bit, given the kind of number has come in much lower than expectation. But tell me one thing, does this clearly signal that RBI or government needs to do something about consumption? We saw it with the earnings of corporates as well. There is that clamor across the street that there needs to be something done for the middle class and the low income group. Do you think that is something which could be a big focus point come the budget 2025?
So, Anisha, that's a interesting question. Let me add one bit which I track, on the rate cut, Indian rate cut, from an Indian rate cut perspective. I think more than inflation, RBI is also trying to manage the currency levels. And out here, I go with the wisdom of the people who understand this much better. I think Arvind Subramaniam recently wrote an interesting paper that he kind of put forward. He's trying to make an argument that for the last 1.5 years, RBI in an implied manner is trying to manage the currency, right? The real effective exchange rate. So I don't know whether the equation is as simple as if the inflation is, growth is low or inflation is low, the RBI can cut rates. I think they have to manage this third dimension of currency. And my sense is if they decide to cut rates, which if I were in that place, I would, they will have to let go of the currency, the broad range of currency that they're trying to manage. Anisha, that's where I stand, Anisha, on this.
Anurag, if I were to move away from India and talk about some of the other macroeconomic global data points, we will be watching out for a lot of the labor data, etc., that comes out. And then the speeches will be closely monitored from the Federal Reserve governors. What's your expectation on that front?
So, Awan, out here, I think Federal Reserve now has ceased to be the news, right? They broadly are at a point where they have to reach at, say, about 3.5% by end of 2025. So just about 4 rate cuts to go, right? From 4.5 to 3.5. And they have like 8 or 9 meetings to go. So I don't know, they might do a cut in December. They may not, but because, look at this overall next year, there are about 9 meetings to go and just about 425 basis rate cuts. So I think they are at a comfortable place. They will take their time and they will let the economy absorb this. But I think the real action in US now has moved away from, look, inflation is on the way down to 2%. It will get there. But I think the entire action now is on the government side. I think the the entire the over-regulation of the government, you see even in the last 2 months, they are like trying to get every company in the hook, the FTC especially, But I think eventually the market is looking in January, the deal making, the entire regulation easing and financial regulation easing and everything. I think the animal spirits are back. So US is the place to be if it comes to 2025 and even now. And no wonder you see the money really trying to move away from emerging markets to the extent it can. And nobody is saying that you should move the entire money, but to the extent the marginal money is moving to US. That's where the action is, Avan, I would say.
So that's where the action is. US still is something that people are watching out for very closely. Thanks, Anurag, for making time and speaking with us today. But
if you like this video, then like, share and subscribe to ET Now.